Is it? Is it done yet? Okay, silver, 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 silver. All right. This is it. I'm going crazy. Silver, 20 bucks, end of June. Why? How am I coming up with that number? Well, there's one chart I did recently that really, it's like a warning sign, but at the same time, I saw it like a fuel that silver could consume on its way to these levels here. It's 2016 highs, just like gold did last year when it broke out above its 1350. I think it's about time. It's silver's turn to at least go test that level. And from what I've gathered recently is silver could actually be going there by the end of June, guys. So let me just put you in context with my framework. I always draw my lines based on closes. The rest is noise. If you want to see the true picture, here's a monthly defined close right there. So that's 1818. Draw the line, gap up, don't care. That's noise during the month. Going to the moon, no. Close here, 17. Look at that. All these candles staying within that range. The wicks being noise from smaller time frames. Until the March Madness broke down, kaput, came back in, and closed above this previously defined monthly defined breakout line at 1850. So that's the first clue. This right now could have been a false breakout, and this presently the June candle is showing us, hey, that's a false breakout, guys. You got trapped. Then you sell, but I think that this is actually a trap. As crazy as it seems, I think that this candle is going to at least close above that 1818 level, 1815 level. But I think it's actually going to go and touch that crazy, crazy level right here at 20 by the end of the month, guys. And I'm going to come back to my last chart. I'm going to show you how much fuel we have left. And I think we have at minimum enough fuel to get here, maybe up, higher up, a little higher up. But right now I'm aiming a close right here, guys. What else could stall a rally in silver? Well, what could stall a rally in silver? You have to look at the macro charts and for the precious metal sector, which that silver reacts to. VIX, US dollar index, and the gold silver ratio recently, or for the past little while, they've been indicators of market instability, of Fed manipulation that's going to have to be done to stabilize to avoid a total market meltdown. And you've seen it right here. When the VIX was topping, when the DXY, money flowing into the DXY was topping probably as a safe haven currency, and as the GSR was topping, that means nobody's going into silver. Whoa, no inflation, no risk asset, nothing's going in there. And gold was holding its ground like to 120, and people saying, oh, why is the GSR going to 120? But what would have been saying, instead of saying, oh, it's too high, it has to go down historically, if you would have overlaid it to the VIX, the DXY, the GSR was actually a health monitor of the whole financial system, and it's been acting like that for a while. So if the GSR is really high, that means gold holding its strength. It's pricing in future needs for liquidity injections in the market, and no money's going into silver at that moment right there. And the U.S. stocks, etc. This was the huge March sell-off. But it's also the peak, so max fear, and it's also in this peak, it was also the bottom precious metals. And then what happens? Silver starts going up as these indicators or these charts start dwindling down. U.S. equities have been going up, silver has been going up, gold has been going up, but stalling at the same time. And all the way to bring us to today. Right here, this is another indication of fuel. When this bottoms, when the GSR bottoms at 85 and DXY starts bottoming, I don't know where, 85 or 80, and the VIX even goes down to these low levels, 10, 15, 14. That's when you got to be wary that the silver could be hitting some resistance on the chart by the time this unwinds, by the time it completes its move. And we could be heading for a spike up in the VIX, a spike up in the DXY and the GSR as silver takes a dive, a correction. Hopefully higher lows and creating another great entry a little lower. So you got to take that into the whole weight of evidence, and to make sure that macro technicals or macro charts or peripheral charts, they're still supporting you. I'm always looking for charts saying how much fuel I have left. Like, people look at indicators for the chart itself. Oh, it's oversold, overbought, but they're just looking at their chart. But when you have like a synergy and other charts are syncing up, showing you that there's still margin for price movement, you should follow that. It really helps having a more probable outcome, guys. All right, here's my gold chart. If I think that silver is going to go up this month in the next 21 days to $20, and the GSR has to keep going down, VIX going down, DXY going down, all that risk on inflation expectation is going to creep up until we hit a wall in those charts. Well, gold has to stall, has to stay where it is or barely move. So to get a GSR of maybe 85, I need a silver, my target is 20. Then I need a gold maybe of 1700. So it's going to play around that area. So let's see how the gold is going to behave. Is that logical for me to expect that? Well, look at the 6-month moving average for gold, and that trend's really been respecting it post 2008. Oh, touch, up. And look at how much time it takes usually in between, like 1, 2, 3, 4, 5, 6, 7 months. Expand, shrink, touch a 6-month moving average, explode, 1, 2, 3, 4, 5, 6 months, touch it, explode, 1, 2, 3, 4, 5, 6-month touch, explode, 1, 2, 3, 4, 5, touch, explode. It did that 7 times successfully. 2016, that mini bull run, it did it once perfectly after 1, 2, 3, 4, 5, touch, and then go explode. Look, in our present bull run right now, we actually did it 1, 2, 3 times, and these 2 times could be the official ones if you consider that they were above that 1350 monthly defined close right here. Look at that. 1, 2, 3, 4, 5, 6, close. 1, 2, 3, 4, 5, 6, close. 1, 2, 3, 4, 5, 6, close. So I'm expecting that 6-month moving average to keep climbing up. Gold staying around this area, maybe a wick that's going to go down to 1650, scaring more people, maybe a close at 1700 or 1680 above these levels, creating in itself just for gold a great buying entry, right? These are, I call these the fear points. In an uptrend, hitting that is the best low risk entry, right? Because you enter here, your sell stop, it's going to barely get tested, usually goes up, even while this crazy March Madness was a outlier. And very fun to enter on these pullbacks right here, where most people are looking to enter on breakouts, which is good. But usually a breakout, you know that within 1 to 3 months, there's a pullback to that breakout line. So you have to suffer emotionally. It's going back. Is it going to go down? Well, right here, you're buying when it goes down, when it tests that breakout line, which is now support, or that 6-month moving average going upwards. Great entry points. So in the grand theme of things, I think silver is going to really explode this month, maybe next one. The last chart, I'll tell you why I'm hesitant, but I'm going to go for my $20 target for the next 21 days because I think gold is going to keep stalling here. And I saw it on other charts, gold in the Canadian dollars, Australian dollars, all the other currencies. I've seen that with nice wicks on those monthly candles for multiple months, while gold has been going up in US dollar as it's been weakening. Other currencies have been strengthening, and there's a lot of candles like that with high wicks on the other currency charts versus gold, signaling that gold in itself is ready for a catch-up phase and let those moving average catch up after an important move, guys. All right, let's go to the miners. Okay, I just posted this today. So in the forest to tree approach, Stan Weinstein, awesome. If you apply that to the precious metals complex, you want gold to break out, check, at 1350. We had that monthly defined last year. Then you want the gold miners to break out, monthly confirmed. We've done that. The gold miners did that a few months back before or after March Madness. I already forget. After that, it's silver and silver metal, and then the silver juniors to break out. And break out, what I mean, above there's 2016 highs the same way as gold did. So there's a lot of room to go up. But what you want to see is the performance, the embryonic performance of silver juniors. You want them outperforming the seniors. If you see that and the seniors are outperforming the metal, you know that it's risk on, the money's flowing in, and the juniors are getting the bid. So that's very, very healthy to bring everything up. New stands, Mansfield relative strength. Pop in the seniors, SIL. SILJ right here as the juniors. So if the seniors are underperforming the juniors, that means the juniors are exploding even higher. So the silver miners, the seniors are in perfect health. They're great. You could be in them. But you know that when this is going down right here, the juniors are doing even better, which is what you want to see in a precious bulls market. Look at that. As soon as the juniors start outperforming the seniors, look at the price action just explode up. Same thing happened here. End of March, it's the juniors that just exploded, outperforming the seniors. So really risk on right there for the precious metals complex. And right now, the seniors are hitting monthly defined resistance, just like we had in 2016. See, we already did this huge leg up here. We're already halfway through, guys, and we're already doing that halfway mast, that continuation pattern right here, 36.75, 32.75, and we're already bouncing through that area right here. Extremely bullish. So it's still in the stage 2. Silver miners, silver juniors, everything's a-okay there. So it comes down to my fuel, guys. How much fuel do I have for the silver metal itself to reach that $20 level? How much fuel do I have left for the silver miners to reach their 2016 highs, guys? All right, here it is. This is my weird science chart. Not easy to understand. A while back, I was experimenting. I wanted to know how much of an asset the price was driven by the fiat, the denominated fiat it's based in, or how much is it speculation. So I used Silver Express in US dollars minus Silver Express in New Zealand dollar, and the delta should be the currency change, or the delta should be the change in the New Zealand USD pair. If you pop in the correlation chart comparing that pair, if it stays high, that means silver is acting as a monetary metal. Its price fluctuations is because the fiat currencies are moving, and it's moving accordingly. If you do that with gold, there's a few charts. You're going to have to go through my Twitter history or go on Gold Tent. Gold trades primarily like a monetary metal, like a fiat. It's like a currency. It barely has these dips, because these dips, what happens is the correlation, since it's dropping with that fiat pair, the rest is speculation. So this is silver going in flame on mode. Just flame on, speculation mode. You're moving independent of the fiat currency change. It's just people, and when silver does that, it really goes haywire to a crescendo top, parabolic top right here, another one here, another one here, another top here, 2016, and we're heading towards one, guys. So right now it's acting in speculation mode. We're at .24. We've had important highs in silver when we were at these levels, .02, minus 0.05, 1.05, 0.7. Except here in 2011, the outlier was at 0.20, and it couldn't go lower than that. So we're at 0.24. So instead of saying, we're out of fuel, it's time to go crazy. Well, if I take the whole weight of evidence that the silver miners seem to have still juice in them, that gold's slowing down, but that the GSR is going down. So that means that the silver should be going up. And look, there's that vacuum right here all the way to 20. I said, I'm going to zoom in, and I measured in how much from the .24 all the way down to a top, how much gain in how much days. So here, 28 days, 14 gain percent, 27% move in 70 days, 2.5% gain in 70 days, 21 days, 14% gain, 13% gain in 21 days. So this is where I came up. Come back to everything I've outlined previously in this podcast. My low watermark is 14% gains in 21% days. That's what it's shown us it's done before, when the that ratio, that speculation ratio, was starting to burn all that fuel from that .24 all the way to its peak, or its bottom here, and its peak in silver price. 14% times the actual price, and we're right here about 1987, guys. Now look, there's higher. We could here it lasted longer at the bottom, higher burnout. So we actually did 27% gain in 70 days. So how long is that going to stretch? Well, silver might go up to 22, maybe a little higher. That could permit the silver miners to reach those 2016 highs, guys. If they don't reach them, we'll have to see where the dust settles when the silver reaches 20. But if this goes really fast, I don't think the miners are going to be too far behind, guys. And after that, well, you're going to have to expect, I think, a pullback, let the dust settle, take the whole weight of evidence in, and see where we could get a great risk-reward entry as silver pulls back, and we could get in when it hits that moving average going upwards. Gold, same thing, could be a great entry in gold by the end of the month, early July, depending where it ends. It could be a great entry right there. And take the whole weight of evidence, guys, into focus. And if there's a hard wall coming up, take a step back. But right now, I think we're going to be in a fear of missing out mode, melt up mode for silver. There was a lot of fear this week. I looked at the COT. The COT is still looking great. And keep checking my tweets on Twitter. Some podcasts I'm not doing as often as before, but I'm going to try to upscale my output of podcasts because I think there's added value for me describing what I'm actually seeing. Some of the charts I'm doing, sometimes they're it looks like, Patrick, you're out there, stop smoking whatever you're smoking because it doesn't make sense. But there's a rationale which brings me to these types of analysis, and I'll try to keep sharing with you guys. So don't forget to like and subscribe. Ciao, guys.